Here's how and why you want to sell put options in under 5 minutes. Explain step by step the advantages and why you want to sell put options. So a put option, when you sell it, is basically like selling insurance. When you're selling a put option, you collect income up front and you actually get paid to buy a stock that you get to choose the strike price. So let's jump into my portfolio and show you an example of that. So I'm going to be using a stock like Apple. So I'm going to type in Apple here and I'm using Robinhood. So you can see right here that Apple's at $196 per share. And let's just say that I want to buy Apple for under the current price. That's where selling puts is really amazing as an option strategy. So what I'm going to do is I'm going to trade Apple options, right? The first step that you want to do is you want to pick an expiration date. So I'm going to pick an expiration date that's going to be about 1 month away. I personally prefer selling monthly options because when I'm selling options, I want to have passive income. Passive income is better than active income, and I treat options as a consistent, reliable source of income. So when I'm looking at expiration date, I usually go for monthly options. However, you can also go for like weekly options, and you can go for options that are like 2-3 months out if you really want that passive income. Let's use 27 days in this example. So what you want to do on Robinhood is you want to pick a stock that you like, because when you sell puts, you better like that stock because you can get assigned and you will get assigned if the stock goes below your strike price. So let me show you how that looks like. First, go to sell, then put option. If I like Apple at $190 per share, I can click this right here and I can sell a put option for $190. You'll see this is called a cash secured put. You want to stick to cash secured puts and actually have the cash available if you are assigned, because if you don't have the cash available, that's really bad, and that's called naked selling puts. So right here in this position, the maximum profit that I'm collecting is actually upfront. I get paid right away, $765 per contract. Now, the amount I am risking is $18,000, and the reason why I'm doing this is because the actual risk is not really $18,000. You see, the way that Robinhood is actually calculating this is if the Apple stock went down to zero, which is just basically impossible. It's not going down to zero. So the actual max loss here isn't really 18,000. It's just how much lower Apple stock goes below the break-even point. You figure out break-even point by basically taking the strike price here, which is 190, and subtract out the premium that you get paid, and that makes a break-even point of $182.25. So yes, you're losing dollar for dollar everything under 182.25. And if you think about it and you like the stock at 190, then you would want to sell a put option. So selling a put option is amazing because you get paid to buy a stock that you want to own anyways. However, it's even better than that, because when you sell a put option at 190, your break-even is 182. So the premium that you collect is income, and you can do this every single time that the option expires out of the money. Now, if the option expires in the money, then you, of course, have to take ownership and you will get assigned of the option. One of my favorite things to do with selling put options and why it's so powerful is because instead of buying a stock for whatever price it's trading at in the market, selling a put option actually allows you to collect income, get paid, and actually pick the strike that you want to buy the option for. In fact, when I first learned about this strategy when I was studying finance, I thought that this strategy was like almost too good to be true, but it actually makes sense in some ways because many people want to hedge their portfolio and they want to protect themselves. And when you're selling an option, the reason why it's so powerful and why you would want to use this strategy is because other people are basically paying you to take on the risk to buy a stock at a lower price in case the price goes down dramatically. Real quickly, I want to pack in a lot of knowledge and information in this one fast video, and I want to show you a position that I have open right now, and this is going to be an example of rolling an option lower. Because when you sell a put option, if you don't want to get assigned, you only have two options. You can either close that option or you can roll that position lower. So let's take a look at a position that I have open right now, which is ACHR. This is a company that I like a lot, and I ended up selling put option. However, the put option strike price is $8 per share, and the current stock price is $7 per share. So let's say that I don't want to get assigned. You can see that this option expires on April 17th, and it's totally okay if you're watching this in the future because you can just apply the same logic and thought process. So what I'm going to do right now is, or I don't have the capital, or I don't like the stock at $8 per share. What I can do instead is I can go to roll. Rolling allows you to basically adjust the strike price. You adjust the strike price and you either take it down in the case of selling a put option. So what I'm going to do right now is you can see right here I have an $8 sell put and it's expiring on April 17. I'm going to put more time on this trade, so I'm going to go out into the future. Let's say I'm going to go out 90 days, which is actually a significant amount of time. 90 days is not little. However, I'm going to show you the benefit here, which is I can move from $8 down to $7, which is a really big difference. That's like over a 10% change. And essentially you can see here that in days I can move down from 8 to 7, and I actually have a net credit here of 3 cents per contract. And because I have 50 contracts, this is actually going to give me a total credit of $150. So I can reduce my strike price from 8 to 7, which helps me out a lot. And I actually get paid to reduce my strike price, which is the most amazing thing ever. If you want to learn more about selling put options and the strategy that I use and how to manage put options, I have a full free course here on YouTube, and it goes over a lot of examples, and it'll absolutely help you learn and take your option trading and selling put strategy to the next level. You can check out the full free course here on the screen right now or linked in the description.